verify that they're having the correct withholding from their paycheck. And we are seeing some changes, especially with the major tax law change that we had at the end of December. I know as a professional, you'll want to work with your clients so that they do not incur a penalty or for underpayment or larger than usual tax bill for 2008 when they start filing their returns.
2018.
18. I'm sorry, 18. Wow, I'm sorry. Tough morning. To help you with your clients, we are going to be posting some links that'll link you right to the various tools. Now, without further ado, as you know, she's here. I'm going to turn it over to Phyllis, who will begin speaking about HSAs.
Morning, everybody. Nice to be back. And I want to just comment that it's interesting that we're talking about the effect that vasectomies have had on HSAs in the state of Maryland on what is actually International Vasectomy Day today. I think that if you attended a 2017 tax update, you were astounded when Bob Jennings noticed that HSA contributions were no longer allowed in the state of Maryland for 2018. Most of us in the audience were like, what? What are you talking about? Well, to give you the history, in case you haven't been paying attention to me in the past, because we've posted a lot of this, in 2016, the Maryland General Assembly passed what they called the Contraceptive Equity Act. This has been pushed and is being pushed around the country by Planned Parenthood and many other groups. But in Maryland, it was considered to be absolutely trailblazing that Maryland was in the forefront of birth control access for everyone by expanding coverage and lowering costs for all types of contraception by state-regulated insurance plans. And remember, when we talk about Maryland state-regulated insurance plans are the ones that are affected by this. So possibly if someone is involved in a plan that's regulated by a union or a national organization, it's going to be different. But if you're in a Maryland state-regulated insurance plan, this affects you. With all of the research and the hearings and the reports for and against during the hearings for the Contraceptive Equity Plan, no one noticed a provision that was going to jeopardize health savings account contributions. And as I said, Bob Jennings is the one that noticed. So this is what happened. The Contraceptive Equity Act requires that Maryland regulated insurance plans provide deductible. The Affordable Care Act says that only preventative care can be paid 100% by HSA high qualified deductible insurance plans. And the IRS says that vasectomies are elective and not preventative care. And therefore, the provision that vasectomies be paid for 100% meant no HSA contributions for Maryland state regulated insurance plans in 2018. And as your clients and yourselves were renewing your insurance policies, even though you had an HSA qualified high deductible plan in the past, you may very well have noticed, or maybe you didn't, that your paperwork for your 2018 plan said non-qualified. So everybody went crazy. You know, all of a sudden during the 2017, everybody went crazy trying to figure out what they were going to do because the Contraceptive Equity Plan went into effect on January 1st of 2018. The legislature tried to fix the issue by changing the rules, by putting forward a law that said, until IRS came to its senses and says that vasectomies are preventative care and not elective surgery, we will require all Maryland state regulated insurance plans to cover vasectomies 100% except for high deductible plans with an HSA. In that case, the vasectomy would have a deductible or copay. Well, that was all well and good. But the 2018 insurance contracts are approved early, probably by October, November of 2017. The contracts were already written. They'd already been sent out. And the insurance companies' attorneys were saying, tough, you can pass whatever law you want, but the plans are the plans for 2018. Enter the IRS. After we made this huge announcement, no HSA contributions can be made, there are no legal HSA contributions can be made by either individuals or by employers for their employees. The IRS came out on March 5th of 2018 and said, with notice 2018-12, that there will be transitional relief on the issue of male sterilization and HSA accounts. Apparently, Maryland is not the only state that did this. From what we've been able to see, Illinois has a similar law. California is coming into it. New York has been trying to pass a similar law. So IRS noticed that this was definitely an issue. Now, IRS is not backing down on the fact that male sterilization, vasectomies, are elective surgery, and that they cannot be they cannot be covered 100%. Male sterilization is not preventative. Male sterilization must include cost-sharing payments, co-pays and deductibles, and HDHP policies that mandate payments for male sterilization are not qualified for patients, period. However, for 2018 and 2019, in order to give the individual states time to put a fix through for the law that they passed, IRS is allowing HSA contributions even if the HDHP policy is not qualified because of the male sterilization requirement. So what that means for you is that even though your paperwork might say that you have a high deductible plan that this year is not HSA qualified, it has been HSA qualified in the past, you can continue to make 2018 fully qualified deductible HSA contributions. You can do them for yourself. Employers can make them for their employees. So we do have a fix. If the legislatures don't get a legislative fix in of the type that we were talking about earlier, where they effectively carve out the vasectomy for high deductible HSA qualified plans and say, in that case, those plans will and or a deductible. If the state legislatures don't get that fixed by January 1st, 2020, then those states will not be able to, the residents of those states will not be able to make HSA contributions. It appears that Maryland, I mean, everybody, both houses in Maryland have passed bill. Sorry, both houses in Maryland have passed a bill that would fix it in Maryland. I'm sure that the governor is going to sign it because everybody wants the HSA plans to be allowed in Maryland. They really do understand what an important thing this is for individuals. So they still have to do a finalization to correct the male sterilization mandate. But as long as the bill is passed and signed before 2020, everything's going to be fine. In the meantime, you can have a HSA contribution in the state of Maryland for 2018 and 2019. Now, please remember that other states are going through this same thing. Nationwide tax practices that we have these days, it's very possible that this is not just an issue for your Maryland resident clients. So make sure that you're paying attention to what's going on in these other states. As I've said, Illinois currently has the same problem that Maryland has. New York is trying to pass legislation. Vermont was smart enough that when they passed their Contraceptive Equity Act, they already said that vasectomies would have to have a copay or deductible for HSA qualified plans. So they pretty much fixed it in advance. If you want to see the entire notice that IRS put out regarding this transitional relief, it is on the IRS website as 2018-12. So, yeah, and I'm sure that the link to it is going to be up on the screen for you there. So it's available to you. If you have any questions, speak out. And if you don't, I'm done. Happy Vasectomy Day. And now Dana, who is with Task and does great work with benefits for employees and for employee benefit plans. So Dana, come on down.
Thank you, Sandy and Phyllis. My name is Dana Braun. A lot of you do know me. I've been with Maryland Society of Accountants for the last almost 18 years.
Yes, sir.
We have a great association and a wholesale together with MSATP and Task. And I know that Phyllis just gave you a whole lot of information about male vasectomies. And I hope today, Maryland said she's not looking at me to be the first one to take that on. But the reason I'm here this morning is to talk to you a little bit about compliance. I work with Bob Jennings. I've worked with Sandy for the last 17 years. A lot of you do know me. And Task has been around now for the last 42 years. And our job is to make sure that your employees are compliant, your companies are compliant with ERISA, HIPAA, non-discrimination testing, and so forth, COBRA. Those are a lot of the different things. Now, a lot of the brokers are out there and they're putting in these, for example, high deductible health plans, these HSA plans. As Phyllis mentioned, they're trying to pass legislation for that. We've been working very closely with MSATP to get this in. A lot of the plans haven't been written for 2019, for 2020. So we don't really even know what's going to happen with that. So my job also is to work with MSATP to make sure that they get a lot of the information along with Bob Jennings to be able to keep you informed with what's going on with that the vasectomy law. Now, as far as TASC is concerned, our job, like I said, is to make sure that your clients are compliant. There are a lot of things that are happening right now with the IRS. If you've got ACA reporting, you've got HIPAA phase 2 audits that are coming in, you've got small audits coming in for the employer mandate and so forth. Our job, my job, is as a certified healthcare reform specialist and regional sales director for TASC is to work with you and your clients to make sure that we've touched all the bases. It's a lot less expensive for you and your clients to get it right the first time, to be ERISA compliant, to make sure, for example, that when you hand out any summary plan descriptions to any of the employees, that they are ERISA compliant, that they have all the ACA notices that are still required, that they have their Medicare D notices. Some of the things that are happening, though, is there's a lot of people that use the HSA, but there's a lot of people who don't, because first of all, we deal with small employers, mom and pop, as you already know, with AgriPlan, BizPlan, and that's a program since 1954 that's been designed so that a husband or a wife who owns a business can hire that spouse and be able to put their health insurance premiums and all of their out-of-pocket medical expenses through that 105 plan and get 100% tax deductibility. We also know that in order to be able to deduct out-of-pocket medical expenses, you have to be over 7.5% of your adjusted gross income. With a 105 plan, hire just a spouse, and you can deduct everything from the first penny. Now, that's going to take me to the second step, which a lot of the employers are doing, and you see as accountants, that employers, when they did this group mandate for the up their health plans, and instead of putting a health plan in, they decided to reimburse employees with after-tax dollars. Now, I've worked a lot with Bob Jennings on what's called the QSARA, the Qualified Small Employer HRA. That's one of the things that you're going to want to look at, because employers are reimbursing employees for health insurance premiums and out-of-pocket medical expenses, and nobody's saving the tax dollars. So what a QSARA allows the employers to do is reimburse a family up to $10,250 for health insurance premiums and out-of-pocket medical expenses, even if they're on the exchange. And that changes a little bit when people are getting subsidies, which is kind of gone too. It also allows $5,050 for individuals. So what that actually does for employers is it gives them the opportunity to give a tax-free benefit. So the employee is saving federal, state, and FICA, and the employer is saving the matching FICA. So it's a win-win there. But that also jumps into HIPAA regulations. A lot of the employers are still keeping, they're going back to what we would call fully insured plans. There's a lot of different ways to insure people nowadays. But when you do fully insured plans, most of the employers I work with do a pre-tax deduction for employers, but have no 125 plan document. We do that as well to make sure that the employees are saving federal, state, and FICA legally, as well as the employer saving the matching FICA. So TASC is set up to make sure that you can do everything from a small group, a Section 105 mom and pop biz plan, to a QSARA where everybody saves taxes on that, to flexible spending accounts, and most importantly, with everything that's going on, especially with the legislation, there's a RISA. RISA is the Employee Retirement Income Security Act. I prefer to call it every ridiculous idea since Adam. But but that's one of the things that employers need to be aware of, is making sure that any fully insured health plan is compliant with the Department of Labor, IRS, EBSA, and there are audits happening. If you have employers that are over 50, you've got to make sure that you're doing the ACA reporting and make sure that that's being done as well. Everybody is getting a little present after the beginning of the year, which is called the 226J, if you happen to be an applicable large employer, where the IRS is actually sending out letters to employers right now, sending $86,000 because you're not compliant with the ACA. A lot of these employers are. They do panic. But if you have questions on something like that, pick up the phone, call Maryland Society. They can get you in touch with me. You have my information all over the place. One of the things you're going to want to look at is the TASK website, which is also linked with MSATP. So you can go to www.taskonline.com, find out anything you need, or you can contact me as well. So I want to thank these ladies and MSATP for giving me the time, and I'll be glad to help you. Thank you, Sandy.
I know Dana for a very long time. Thank you, Dana.
You're quite welcome, Sandy.
It's always a joy talking with you, and thank you so much for being here this morning. We really appreciate all you do and all the support you've given the society throughout the years. Again, you're a good person, a great support to the society, and a good friend. Thank you so much for being here.
Thank you. I'm working on it.
Okay. Well, we're almost finished up for the day. I just want to send my thanks to Phyllis once again. She did an amazing job. Thank you, Phyllis, for being here with us again this morning. I know mornings are not your forte, but thank you so much for doing this.
Anything for you, Sam.
Thank you so much.
Absolutely.
So I want to talk a little bit about what we can expect for next week's presentation. As you know, this session ends on, I lost my other piece of paper. I'm sorry, on Monday, April 9th at midnight. So next week, Phyllis will be back again. Thank you, Phyllis. And we will be discussing the bills the bills that we've seen passed during this session. Thank you so much. One of the things we are going to be looking at and discussing actually is how Maryland handled the 2018 Tax Act that was passed at the end of December. Last night on the news, we did see some activity. So there seems to be some kind of compromise going on down in Annapolis. We don't know the exact details at this point in time, but I know Phyllis will be expanding on that next week. So without further ado, I want to thank everyone for joining us this morning. Appreciate you taking the time. I know you're all busy with your tax season, and thank you again, and we'll see you next week. Thank you.